The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour. And it doesn't matter where you're at, as long as you're here at this time.
The following takes place between 2 p.m. and 3 p.m.
So we're off 30 points on the S&P cash, Dow down 273, 4. NASDAQ off 164, the Russell's off 33. And, a little bit of selling. But let's go back to this because I want to change these right now to what's really going on in the church of what's happening now. And the first one is the insurance companies. If I could type. Have to sell. Insurance companies get premiums. They take those premiums, they put them in the stock market or bonds and that kind of stuff. And when a big disaster comes, guess what? They got to sell those stocks. Now, they don't have to sell them all at once, and two, they can delay and will, as long as they can, delay paying anybody anything. They don't make money by paying people money. They get money by hoping somebody dies between now and then and didn't ask for their money for the insurance, or just gets tired of fighting them, or all the other reasons that insurance companies don't pay. But certainly one of the things that you want to think about is how much money, how big is the disaster, and how much are they going to have to sell? And that is what I've been trying to figure out how to think about today. And for the most part, it's something that's hard to, what do they call it in golf? Handicap. So that's kind of it. We had a lot of earnings disasters last week. Doesn't help anything that we know that insurance companies are going to have to sell. When they're going to start selling is one thing, but I think a lot of people are already looking at it. In the meantime, I don't think they're going to sell before the end of the year. Two, I think the Fed's going to be there to put enough money in the market, so they're not going to blow the market apart. But I don't think that there's a lot of chance for new highs before the end of the year now. Fed's not going to pump it up just so he can give them a bunch of money and bail them out. Insurance companies are not banks. I'm pretty sure that somebody along the side, somewhere along that part said that. So anyway, is the market weak? Yes. Is anything going to happen probably before Wednesday? I doubt it. And of course, Wednesday, we've got the Fed, right? Let me go back. 2021, I think, right? Am I living in a glass bubble? December 14th and 15th. So we'll have a big announcement at 2:00 on Wednesday. They'll have a presser. It goes from 2:30 to 3:15 Eastern time. And then we're going to move along with the markets. Maybe what they said is bad enough. Again, these are minutes for something that happened before Friday. They may actually put something in those minutes, amending them. But that's kind of it. Yeah, press conference 2:30. Not a whole lot else going on. So how many times has the market significantly moved before a Fed meeting in the last 5 years? And I don't think I can count one. They were all pretty much flat by then. So just going by history, I'd have to say that if you want to trade the chop, that's something you may want to do. But my guess is that we walk in about noon on Wednesday, and the S&P is sitting right at 4,700. Just a guess, not a wild guess, but that's right at the resistance level as we went through it on Friday, and they pushed it up all the way into the end of the market. But I just suspect we've got 2 or 3 days of going sideways. Well, 2.5 days now. And as they say around pilots, it's hours and hours of boredom with minutes of sheer terror. That minutes of sheer terror will be after probably 2 o'clock for 15 minutes, and after 3:15 for 45 minutes, and then everybody will get to go home, think about what's going on, and decide what they're actually going to do on Thursday. But, my guess is we're going to have at least 5 different moves in the market after they get done at 2 o'clock coming out with their thing. And, yeah, it's just everything is a total train wreck this week for predictions. So time to pretty much stand back. We do have fairly good resistance in many stocks at 4,700 on the S&P cash. We do have people that are going to have to sell with those insurance companies. It's unclear. Maybe they'll say about something about it on Wednesday about how much support they're going to give the market before they start raising interest rates in the spring. But we shall see. 877-927-6648. Email me at path@tfnn.com. I'm actually kind of surprised that they let the market go as much as they have already. But, yeah, they may have gotten up late. Who knows? So, we've got some questions already brewing. Let's go ahead and get my charts up so we can get that done. And why don't we just do a little bit of history right now, because I think that'll be good. Of course, something else broke. Okay. You just can't do it all. But we will come back and do history after that. Anyway, let's get a chart up here, and then we'll get into history when we return. Of course, it was kind of a nonstop drumbeat this morning before the bell about Apple hitting its $3 trillion mark. And almost like Lucy, you just knew that they were going to pull the ball away right when Charlie Brown was getting ready to kick. Question. Please repeat the insurance company. They're going to have to sell to raise cash to pay all those things. And right now they're just saying it's bigger than anything else has ever been. So if you go back historically, look what happened after Katrina and some of the big destruction in the Miami side of Florida. There's some considerable selling. They don't tend to be in the highest volatility tech stocks, but they tend to be in a lot of stocks. Look back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
As we return, we're ready to do a little hit.
And it's all just a little bit of history repeating.
Amazingly enough, Apple actually IPO'd on this day in 1980. They sold 4.6 million shares at $22 and turning more than 40 Apple employees and investors in instant millionaires. With the stock value closing at 29, the market capitalization put the company's net worth at almost $8 billion. Kind of amazing that they're $3 trillion now. Stock held by Steve Jobs is worth $217 million at the time. Wozniak, $116 million, and Mike Markula, $203. This is the largest IPO in the United States since the Ford Motor Company in 1956. And, of course, knocking on that front door today of another big odometer turnover day. But that's it. Okay, what else do we have? Hopefully that answered your question, Z, but insurance companies put your money in the stock market or bonds or whatever. They make money on it, theoretically to reduce the cost, but mostly so they make a lot of money in the stock market or in the bond market or whatever. When it comes time to pay out, they got to sell. And I don't think there's much else other than that to know. When they start selling, how fast they sell, they're not in a big hurry. But there's going to be a lot. They're going to be some of the biggest sellers on Wall Street for a while, but they tend to be in less volatile stocks. There's some laws about what they can and cannot do. So they may be in Apple a little bit, more likely they're in companies that tend to be old and stodgy, that continue to grow. Think of stocks that Warren Buffett would buy, kind of that stuff. Anyway, on this day in 1980, we get the IPO for Apple, and not going $3 trillion today on that. Now, Question from Eddie. He says, do you think the Fed will be risk being the Grinch that stole Christmas again as he was in 2018? He got a lot of blowback for raising rates at that time, wondering if the Fed takes into this consideration on Wednesday or is going to go Scrooge the market. All the best. While they're not doing anything now, all they're going to do is talk about the stuff that they may do in case something else bad doesn't happen. They want to start raising in early spring. I don't see how anything that we've seen actually changes that. So, as we've said, they haven't backed away from pushing money into the markets. For all the talk of raising, they continue to be accommodative. And with the huge problem with inflation. And yes, I did see, I had a couple people email me. I did see that Tampa was the most inflated town of all towns for inflation based on that. Maybe why I'm so grouchy about it. But certainly doesn't help anything to raise energy prices and literally make everything go up that anybody touches or thinks about. To 877-927-6648. You'll be Clarence. It's a wonderful life. That's interesting. Okay, so let's take a quick look at Apple. You got a lot of volume as it came up to try to tag it. Didn't quite get there. I think it was 183 something that they were blabbing about this morning when I was getting up. No sign yet. Let's go ahead and take a look at some of the others, usual suspects, and see what they're doing. Continue to see sellers in AMD, although volume is fairly light. 133.45 today. You need to, as I said, this setup really looks like it's going to happen after Christmas. Maybe after the first of the year, maybe right after Christmas itself, maybe during that week that I'm planning on being off, but you never know. But no sign here other than lighter volume that anything's happening. Taiwan Semi had some very good numbers out over the weekend. In Taiwan, they post internal revenue, not internal, sounds like the tax guys. They post revenues from their internal books every month at Taiwan Semiconductor, and you can see what's going on. They had some fairly good numbers out there. More problems or more thoughts about China's invading, the Chicoms invading the capitalist wonderland of Taiwan. Down a little bit, but again, not a lot of volume. But my guess is this really needed to test 115.76 with lighter volume. You had 10.5 million shares that day. You got about 3.3. So there isn't a big push to come back in it. Ideally, if you wanted to go long Taiwan Semi, you'd love for it to come back to about 112. Okay. You can email me at path@tfnn.com, as so many people have. Let's see what else we have here. Okay. Another question to look at NVIDIA, NVDA. As we said, it hadn't looked good. You could make the case that NVIDIA's done a double repo, but generally the real key is when it goes back underneath, that you have a big candle and huge volume. You really didn't get it. That's part of the key on doing, kind of getting the big destruction. You do have some volume down today, but you're 38 million into a 66 million share low. I'm sure the destruction didn't do any good. I don't know how many shares those insurance companies have of NVIDIA and AMD, but they probably have a few. Let's see what else we have. Okay. And yes, I did see that. Let's go ahead and see. Someone asked whether I saw this article from Andrew Thrasher. And I did. Somebody posted it earlier, but I've gotten a couple of emails already about just the narrowing. But it's basically what I've been saying for 3 months now, that we've continued to see more narrowing and more narrowing and more narrowing of how wide the market is supported, to the point now where Apple is the only company supporting the market, as far as I can tell. But it's a good article. If you want to read it, email me at path@tfnn.com, and I'll send you the link for Andrew Thrasher. But, yeah, all you have to do is look at my newsletter in the morning and look at the advanced decline line. We'll be back in a bit.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Got a question of which companies do I think that they probably would be selling. I think you can look at companies like Walmart, Amazon, big name, big companies that don't have a lot of don't have the kind of volatility, or one quarter blows up the entire kind of market. They're not going to be in smaller stocks. They got a lot of cash, so that's kind of it. What else do we have here? Amazon. Let's take a quick look at Netflix, NFLX. This looks like everything is okay. This, we're off 29. Let's take a quick look at the volume and see what those guys are doing. Actually, volume pretty good for the sell-off, but not blowout. We're just a little under, let's call it 6.75 billion shares on the day on the CBOE. So that's kind of good. Netflix, you're just retesting the $600 level. As I said, the expense is going to go up way high for Netflix over the next year from costs and just fighting over everything from actors to scripts, studios, everything else. Let's go to the phones. On the bat phone today, we've got John from Philly. How you doing today, John?
David, I'm doing very well. Thanks for taking the call.
You bet.
Say, David, you have helped me in the past greatly with a number of tech stocks. I recall vividly a conversation we had not too long ago where you helped me understand what the company Fastly actually does. But, David, I'm calling you on another tech question, but different names. Specifically, I guess what you'd call the data companies. And I'm not sure that's an apt label, but the names I'm thinking about are Splunk, SPLK, Datadog, DDOG, the ticker symbol AI, that is, the former Workday founder's company. And then I guess the last one would be Palantir, Peter Thiel's company.
Yeah.
Of all those four, the only one that I've actually traded was Splunk, where I bought it in June, where it seemed to be making lows. Perhaps the price had discounted slowing sales growth. It rallied. I took a 25% gain and then felt humbled when it rallied another 30% thereafter, and then, of course, it's just collapsed.
Yep.
David, I don't understand how these companies differ. Of the four, the only one that's actually working the past 6-9 months, is Datadog. I'm wondering if you can share your understanding of how these companies differ, and if you think the prospects for any of those four next 12 months, business-wise, looks good. The stock patterns aside.
Okay, let's talk about what's the difference between the companies. Well, first, or the company that is probably the farthest out and different from the rest of these is Palantir. What is that, PLTR?
Correct.
And they are a company that is very quiet about what they do. They really don't go out past their sphere of core competency, and that is lexical searches. What they do is they take huge amounts of data that they get from the NSA, the CIA, governments, everybody in the world, and they look for patterns out there for terrorists, for people cheating on their taxes, to literally anything the government will pay for them to go and mine. So they're kind of a big search company. They really are not interested in talking to individuals and selling their products to them, right? They need big money to pay for huge amounts of storage and people going back and then figuring out how to use machine language to find people of interest, if you love that show. So that is more about what they do than anything else. Now, we'll go back to some other ones. The first one you brought up was Splunk. Splunk was kind of one of the first what they called dashboard companies. And if you've got a whole bunch of stuff going on, let's say you're Amazon or Walmart or something like that, or maybe you just manage a ton of stuff like servers at Amazon. You got a whole bunch of stuff going on, and you need it condensed on one page, or maybe one large page, of just what's going on. And they call them dashboards because it's the stuff you need to look at right now. The speedometer, the tachometer, which gear you're in, where stuff, how many days are you out on inventory? How many dollars do you have? What do you have to pay the first of the month, right? I would call it the sit rep, right? We want to know the situation right now and all the time. I want to be able to pull that up as a CEO. And I brought this up at the very beginning, I think a couple of years ago, and that was how many CEOs are there that you can sell to? Because that's really what Splunk was. They weren't so much in the, as far as I could tell, in the business of selling dashboards for looking at machines running somewhere, or although they could. But they were just kind of a single one-trick pony, right? We're going to make these dashboards. They're going to be cool. So there are a bunch of dashboard companies out there.
David, on that Splunk, that's a very helpful explanation. Given what you've just described, does that then, given the competition and the market penetration that they got quickly, does that explain why sales growth had evaporated to nothing the past 18 months?
I think so. I think they've gone after the high end, the S&P 500, and there's only so many of those folks. There's a lot.
I understand. Thank you.
There's a lot of competition in that. Now, Datadog is kind of a little different, but very similar chart patterns out here. Datadog is kind of a dashboard, but it's a dashboard for people that have lots of computer equipment. And its dashboard is fine-tuned to telling you that people are hacking your systems, or that there's problems with a server or the internet or everything else, right? Datadog has a bunch of routines that it knows to look for when people are doing stuff that they shouldn't be doing on your network.
I see.
Right? So they're kind of a dashboard company, very clued in to a very specific part of the market. We'll be back in a minute. I think we've got a couple others to talk about.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
And we're back. We still have John on the line.
Right here.
Okay. So you were talking about C3 AI.
I'm sorry, C3 AI, that's right.
Yeah. They have more about when we were talking about machines, Datadog specializing on server farms, that kind of stuff. These guys actually are the guys that are on the assembly lines, and they're putting dashboards together and AI for those things to figure out, the optimum levels for moving things around, hiring and firing, a lot of other stuff like that, fraud detection. They're kind of they've got. My boss used to tell me, we're not big enough that we can fight any of these big companies head on, so we need to pull some, find out where the loose bricks are in the market. They look like they've done a fairly good job at it. There is just this entire thing, except Datadog, has a problem in that there's just too many of these companies. They're all doing stuff. They're all fighting over business now. And there's a lot of free applications that do what these folks do that are more like Red Hat. And now those things were really expensive, and they're moving off to some of those other ones because they don't need all the features of these very expensive packages. But that's C3. They're more of an on the industrial side, anything from watching how crude is flowing down pipelines, that kind of stuff, right?
Good examples. I understand you. David, a closing question. All these companies we've just discussed, are they facing competition, very large competition from internal activities within Amazon, within Microsoft, within Google and all their cloud operations?
I would say a little bit, but to me, it is just how many open source packages that are out there now.
I see.
Free. So really, this is kind of like when companies were going and saying, Red Hat said, you know what, we're just going to sell service. We're going to help maintain the Linux distribution, and here it is. You can use it for your company. And if you want to buy maintenance agreements from us when things go wrong, we'll be glad to be there. And they found a decent business in that. And there are those kind of folks in there that are doing the exact same thing now. In fact, I was busy programming all weekend for a company that has that same kind of model. They're doing something very specific. They got a handful of people. They're doing something that applies to a wide variety of stuff in databases. And the thing is, how are they going to make money? Well, you can sell your own servers, right? We've got our own web services company, and maybe we use Amazon stuff, but we make sure it's all tip-top, secure, all the latest patches are in it, that kind of stuff, and you pay us to do that, right? And there are a lot of little companies around there that are doing that, and they're picking it away at everybody except Datadog, because Datadog is a two-trick pony. It is good on data. It's on good on dashboards, but it's also good on a lot of the kind of stuff from cyber fraud, that kind of stuff that happened last week. And if you can have a foot in two different fields, you're much better off. I think the other folks are. You'd like a three-legged stool, but at least it's a two-legged stool with Datadog, and most of the other companies are just one-legged. So
Gotcha.
they need to specialize. There needs to be some shakeout in this, and maybe they'll change their business model to some of the other companies to more like Red Hat. But it's a tough business. There are a ton of folks in it, and in fact, Dan in the Den brought up AYX, which is another one, and we were talking about Tableau, which is owned by CRM, Salesforce. There are a lot of folks in that kind of business. And CRM.
Thanks so much for that description. I find that really helpful. One last thing. I'm going to be listening, waiting with bated breath for you to go all in on either AI, AYX, SPLK, or AI, or did I already say that one? PLTR, as all of those patterns kind of look to me like they're under pressure with year-end tax loss selling, which, if not for anything else, possibly offer short squeeze bounces or post tax loss selling activity. So I'll be all ears, David. But thanks so much.
You bet. I don't think anything going on with these things between now and the end of the year, other than the entire market maybe selling, like I said, right after Christmas. We've got these double repo patterns. We haven't, we've got on some of them like Tesla, blew apart, but a lot of these other ones are hanging tough. What do we have? TSLA. As I said last week, you've got bigger problems, but you got big candles as it goes back through the 9-day or the 3x3 displaced moving average. And that is kind of problematic. But you had the big day. You had kind of a move back above it. As soon as you came back down, you had some nice candle. What is that on the? Looks like on the 3rd. But a lot of these other ones are probably behind Tesla. I think Tesla was so over bloated that it's there. Anyway, you got 20 million shares going into 27 million shares. So even it isn't, we'll see what the end of the day brings, but maybe it isn't going to break the previous low on volume, or maybe just kind of come close. But this gets to be a really tough time. And if you can find a stock with everybody getting shorted, and then the last couple of days before Christmas, a lot of times you can get, and keep a close eye, you can get some nice sharp short squeezes. But there's not a lot. Like I said, a lot of these tech stocks have been for sale for a while. And they're just, it's the proverbial frog in the pot that gets slowly boiled and doesn't figure it's time to jump out until it's too late and he's already boiled. But there's a whole business around these dashboard kind of companies, and I ran into 2 or 3 of them this weekend when I was doing research for something I'm working on. But it's not for the faint of heart. You want to have a special, and being a shotgun instead of a rifle in the dashboard business is problematic. We'll be back in a minute.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. We just got the last couple of minutes. But if you're interested in these companies, you may want to look at some of the other ones and just how many there are. Clipfolio, $50 a month. iDashboards, iZenda, Click Data, iNet Software, Periscope. That used to be a big deal. $1,000 a month gives you an idea just how expensive some of these companies are. I'm trying to remember how much did they go public? I'm trying to remember on them. Are they still around? Periscope, right? Yeah. I think they were trying to go public at one time. Anyway, they had a huge valuation at one time. Data Hero, Dundas. I used to deal with these guys. Not a great thing. Dasheroo, Zoom, Tableau, Microsoft Power BI. Now this one I'm starting to get very excited about because that's what I was actually working on over the weekend. But a lot of interesting components to power buy from Microsoft. And you all know I'm a big Microsoft fan. Anyway, just some thoughts out there if you want to look at it. A lot of these companies, and just like I said, just way too many. They all charge way too a lot. Let me put it this way: a lot of them charge way too much for what they have. It's not something that no one else can do. There's no kind of really magic elixir one company has. They just need to specialize to make it. Sell when you can, not when you have to. We'll be back tomorrow. Same bat channel, same bat time.